Despite all the things that Jamie was referencing there, and we had a conversation about low volatility with Jane Foley, we haven't got a lot of volatility in some markets, which is quite amazing. Certainly looking at rates, looking at FX. The one place we do have volatility, though, commodities. I mean, is that going to be the way this plays out, do you think, in 2026?
I think certainly in the next week or so, we're not going to have this kind of jump up in volatility. And it was interesting because I was looking particularly at the 10-year yield, and I noticed that it kind of went into this range in September, and it stayed there. And I think a lot of that has to do with the data. As in, we went into government shutdown in October. We haven't had a clear read on the economy since then, and rates in particular are very much driven by your Fed view. So if you don't know where the economy is going, and you have pricing now where you don't have a cut price to think until fully July, maybe a little bit in June in terms of like 22 basis points or something, then there's nothing to really shift around that pricing unless you get a clear view and a number of data prints in one direction, and we still haven't gotten that. So next week, there's still not a huge amount, as in I think we've got third release of GDP and an old PCE print. So I don't think that's what's going to do it unless we get like headlines.
It's Davos next week.
So we could certainly get headline noise.
So is Davos going to do that for us?
I don't
Trump's
know.
going, loads of people are going. It could be exciting.
Yeah, I mean, you certainly could get headline noise on that, and I think that feeds more into your commodity market view than it does into your fixed income view in terms of volatility. Like, I do think at some point rates volatility will have to pick up because it's so compressed. Yep. But you're seeing that these geopolitical plays are coming in the commodity market because people are thinking of it as a hedge. Because we haven't had anything come in with real certainty. And, you know, the weekend's also an event risk in itself in terms of Monday's a U.S. holiday. So you could get announcements from that perspective over the weekend. But I think it's more likely that people keep positioning in gold as a hedge, or you see something actually come through and people aren't sure how sustainable it is, what the impact on the oil price will actually be, given these countries have relatively little supply relative to a 2026 supply glut. And so those volatilities can stay elevated, certainly.
Skylar, what is the sensitivity right now between equities, particularly US equities, and higher yields? If there is that breakout, is that sensitivity still there? And which parts of the equity space would be most potentially vulnerable in that sense?
Yeah, I mean, I think the sensitivity certainly exists, but in any kind of regime, it very much matters why yields are rising. So if yields are rising because of higher premia, which could be related to Fed independence concerns, inflation de-anchoring, et cetera, then I would expect equities to sell off. If yields are rising because growth is strong, because you're in a strong earnings season, that's very much an equity positive. So I think certainly that sensitivity exists, and you're kind of just getting a grind higher in equities throughout this period where volatility is low in rates, because that's just what equities do. You shouldn't really be selling them unless you have a very good reason.
Are you on yen intervention watch? That's our producer came up with that, not me, but I think it's excellent.
Yeah, I mean, absolutely on yen intervention watch. The precursor to intervention is always kind of this verbal intervention that you get, and sometimes the market listens to it. And I think what we're really thinking about is there a risk of kind of speculative positioning getting quite big, or a move that's quite large? And so as you get above 160 and you have a kind of clearer level that's not certain, then I think you need to be watching it quite a lot.
Okay, 150 right now in the Japanese yen versus the dollar, up 0.3%. We've been getting more commentary from officials in Tokyo as we lead up potentially to that Monday moment. We'll see, of course. Skylar, Montgomery, Koning, thank you very much indeed.